Flip us over to live mode, and we should start having people join us on the call.
Okay.
Pull up my screen here. Beautiful.
There we go.
And I can see that people are filtering in and joining us. So probably a couple people were trying a few minutes ago and just wondering if we were there. So
okay.
so welcome to everybody that's just joining us. It's 2 minutes to 1 by my watch. I'm Rob from the St. Catharines Enterprise Center. You should also see Peggy Bosch, who is our guest speaker today. We'll get started in just a minute, or well, 2 or 3 minutes. We had well over 20 people registered. We're about halfway there right now in terms of participants. My philosophy is to always start on time, and this will be recorded as well. So, but we'll just give it a couple minutes to share, to allow people to join in. And Peggy, I see you're a fellow graduate of Brock, so cheers to Brock University. And
Yes.
so, got my Brock University mug here. So one of the last.
I don't have a Brock U mug. I have to get one.
Yeah.
Yeah.
Well, the second last meeting I had out in the public before things changed was at Brock University. I was lucky to be a speaker there on March 12th, and then shortly after that was that was the day the NBA announced their season would close, and the pandemic. Yeah.
I made sure to get my Brock hoodie. I have a Brock hoodie.
Yeah.
And I have a shot glass, believe it or not.
There you go.
And I still have my pencil case from when I was there.
Oh wow.
Yeah.
I love it.
Still living.
See, there you go. There you go.
But yeah, I could use a Brock mug for sure. I'll have to go back up there.
We'll see what we can work out for you.
I like to read the textbooks every once in a while, believe it or not.
Yeah.
Sometimes, if there's a good textbook, even though they're kind of expensive, sometimes they're
absolutely
kind of handy to have. Yeah, like the accounting, basic financial accounting, it lays it all out so nicely with examples and everything. So yeah, it can be helpful. I haven't gotten a new one in a long time, so maybe I should head back up there at some point.
Yeah,
I love it up there.
Let's hope we can do that soon.
I know.
So we have 15 people with us now. It's 1 o'clock, so maybe I'll just start with a little bit of an introduction to the session, and then turn it over to you. And like we talked about, I'll try my best to keep up with you and advance the slides at the right time. So we'll just mention that to our audience to just be a little bit patient with me as I advance the slides. So just to get started, everybody should see both Peggy and myself, and I'm going to go into presenter mode in just a second, and you'll see an accounting and taxation slideshow. Hopefully is that what you see, Peggy? You see the slideshow? Yep. Okay, perfect.
Oh no, I see the just the basic, before you go into slideshow.
Perfect. Okay, that's what I expected. So I was mindful of what other windows were open on my screen.
Oh yeah, I know.
So
did you close your inbox?
Yeah, right. So I want to say welcome to everybody that's with us. There's some names I recognize and some names that are new to me. Welcome back to those of you who are used to coming out to the Enterprise Center, and welcome back to those who have come to some of our other webinars. My name is Rob Belcher. I'm the manager or small business consultant at the St. Catharines Enterprise Center. Normally we're located at 14 Ontario Street, and we're part of the city of St. Catharines. I say normally because most people at the city of St. Catharines, like myself, are now working from home remotely and virtually. So quite fortunate to be doing that. With me is Peggy Bosch, who will be our speaker today. And just before I introduce Peggy and turn it over to you, I'll just tell you one more thing about the Enterprise Center. Like I said, we're part of the city of St. Catharines, and you'll notice that there's a logo for the province of Ontario. The province of Ontario is one of the funders of our office. So they provide funding to the city of St. Catharines, and the city then runs these programs on behalf of the province. this presentation isn't vetted or approved or put out by the province specifically, but it's the type of thing we do with the dollars that we receive from the province. We're here as a support and a resource for small businesses, usually new startups, but lately we're doing more and more for existing small businesses too, sharing information and resources. So I'll share my contact information at the end of this along with Peggy's. So let me introduce Peggy to everybody here, and she's got a really good presentation. She's going to be talking to us about accounting and taxation, and then share some tips on very specific to what we're going through right now. Accounting at this time is really critical. It's really critical that you stay on top of your books. Some programs may require that your bookkeeping is up to date before you can apply. So just to introduce Peggy, she's a graduate from Brock University with an honors degree in accounting. She's received the Chartered Accountant designation in 2006 and the CPA designation in 2008. And she has 14 years experience of practicing in very many practice areas, including private and public company taxation, trusts, estates, small businesses, individuals. And she really enjoys working with individuals and small businesses and has been a great resource to our office over the past almost year now. Is the first time that Peggy and I had a cup of coffee, and she's been helping some of our clients through seminars and what have you. So hopefully her expertise will bring some of you some peace of mind and answer a few questions. There will be a chance for Q&A. Feel free, everybody's muted right now, but just feel free to use the Q&A feature to ask a question if it comes up. I will try my best to monitor that, and as we're going through the presentation, Peggy may be able to answer some questions, and certainly at the end she'd be able to as well. So I see 20 people on the call now, so just about everybody that registered is here. And Peggy, I am going to turn it over to you to talk about the agenda, and then we'll jump right in. So thanks again, Peggy.
Yes, thank you for the introduction, and thank you everybody for joining me today. It's nice to at least congregate online, and the video calls make it so much nicer. A little bit of face-to-face time since we're all segregated like Rob and I are in our home offices. So today we're talking, like Rob said, about accounting and tax. So maybe that's not the most fun and exciting topic like doing websites or marketing plans, but it's something that's equally important for all of us as business owners. And I just started being a business owner myself at the beginning of this year. So even as an accountant, I feel the pain, you know, making the time to do your books and records, making sure everything's up to date. So it's a matter of carving out the time to do it. So in this time now, I'm sure there, you know, people are hopefully maybe still finding ways to work, but if you're not, this is a great way or time to get yourself up to date and get ready for when we are busy again. Staying at home, you know, does have its benefits where you can maybe be a little bit more focused on some of these things and lay out some plans and some systems to be more efficient for when you are busier. The other, you know, little things like being at home and eating more, we can't get our hair cut right now, and those sorts of things are little things that we deal with. So, you know, it's one of those crazy times that we're dealing with right now. So the agenda that we have today looks a little bit action-packed. There's lots of topics here, and some of them I will go through a little bit more detail than others. I've just included some of these topics for your background information, but if there's anything that comes up question-wise, I'm happy to answer for you. I'm assuming that most of the people that are here today are like sole practitioners and not incorporated, but I think most of this information would apply to whether you are like a sole practitioner or like a self-employed small business person versus being an incorporated person or incorporated business. So hopefully, I think that all the information should be applicable. So we'll get started on our first topic of being self-employed. So being responsible for your books and records is part of being a self-employed person. And again, you like I said, you need to carve out your time to address that and make sure you have something set up for yourself that will be, efficient for you and help you as you run your business. You also have to, take time to be in your business and run your business at the same time. Your books and records are going to comprise of a lot of different source documents, whether they be your invoices, checks, deposits, contracts, expenses that you have to have supporting receipts. A lot of this comes down to what you need for tax time. So it's not just throw it in a box and have it ready for tax time. You should try and maintain this a system over the years so that you are organized. Now that we are receiving everything electronically, electronic records are acceptable by CRA. So if you've got a whole whack of receipts, you can scan them in and keep them electronically. You don't have to keep boxes and boxes of records anymore. So how long do you need to keep them? 6 years is basically 7 years. So 6 years worth of records that basically means 7 years. So that's a long time. So electronic records make that a little bit easier to manage. If you do have anything that comes up that's unusual, if you purchase property or sell property, you have late filed returns, that sort of things, I would recommend keeping those records pretty much forever, just in case something comes up and you have to answer for it. The other thing I wanted to mention is keeping your personal accounts separate from your business. That is a huge issue when it comes to tracking everything. So if you have a separate bank account for your business, it just makes things so much easier when it comes to recording what is actually a business transaction versus, your separate personal life. And that is going to be something that you should look into now if you haven't, and keep your business separate from your personal life is one thing that you can do by getting a bank account set up, and that will just keep your records lined up for your business.
Okay. Quick question on that, if you don't mind.
Yep.
I love that I get to monopolize this.
I know.
So if let's say I start a little hobby business on the side, I know it's going to make me a little bit of money, but not a ton, and I'm going to follow your advice. Could I just open up a second personal account for the business? Would that be better than nothing, or is it always best to have a business bank account?
No, definitely. You could open up a separate personal account and just track your business separately doing that. A business bank account, obviously you have more fees and whatnot that apply. And if it's easier for you to just do that and have a small, like a separate personal account, then I don't think that really makes a huge difference in terms of, not having a formal business bank account. It's when you start wanting to get a little bit more, organized in terms of you want to have credit cards and whatnot, and you want to have that in your business name. One aspect that I will actually caveat is if you need to register for HST, which we will talk about a little bit later, you should technically have everything separate, and a business bank account would be recommended for that, because you're going to have separate invoices and contracts in your business name, and your business name should follow with your bank account.
Gotcha. Perfect.
All right.
Okay.
Good question.
I'm sure there'll be plenty others. So.
Yeah.
Yeah.
So we'll talk a little bit about accounting basics and what that means for you as a small business owner. Why do you even worry about your business records and why you need to keep them? So I've listed off a number of sort of reasons here, just to give you an idea of what you would use your accounting records for. And I think one of the primary things is your cash flow. How do you know how much cash you have if you're not tracking it? So, and that's going to be really top of mind right now as we're dealing with maybe a little bit less income, but you still have some expenses to deal with. Another important thing is determining timing of cash receipts. So again, you're looking at how much cash you have on hand, what expenses you have to pay, and when is your cash coming in. So you want to keep track of that. Making sure your debts are paid. If you run afoul of paying CRA amounts due on time, you're looking at penalties and interest, and you're also could be looking at supplier interest payments if you're late. So you want to make sure you're staying up to date on that. Measuring your business performance is going to be something that you really want to think about, because you just want to track that, how are you doing? If you don't know how you're doing, how can you fix it? So accounting records can help you with that. Maintaining records of assets and determining future needs, maintaining your inventory levels to meet customer demand, and again, tax time comes up. Now, there's different ways that you can maintain your books and records. There's formal software programs out there, such as FreshBooks or QuickBooks. They involve, most of them are like a monthly subscription fee, and they're like online based, and they're actually really easy to use. But it depends on, I mean, as Rob mentioned, what if you just have kind of a small business and you don't really want to get into doing really sort of formal records like that, then you can always use an Excel spreadsheet. Set up a workbook and have 1 month per tab, and have your expenses across one column and or across your rows, and your cash transactions, and basically use your Excel. Most people have Excel on their computer, and get into a really good sort of rhythm of updating that on a regular basis. So we'll move on to the next slide, Rob. So basically, how do you calculate your income? So there's two methods that are common, and that would be the accrual method or the cash method. So the accrual method is generally looking at reporting your income no matter when you receive the cash or when you have to make or when you incur your expenses. So it's not necessarily when you pay them. So basically, I'm sure everybody's heard the term setting up an accounts receivable or an accounts payable. So an accounts receivable would happen when you recognize the income, but you haven't received the cash yet. So you maybe issue an invoice to your client and you wait for them to pay you. Well, now you have a receivable, but you haven't actually got the cash. Conversely, an accounts payable would be an expense, let's say your utilities. So you know that your utility bill comes in at sometime the next month, but it's actually for service utilities that you used in the current month. So that's a payable. So these really come into play at the end of the year when you're looking at your cutoff for year end and making sure that you've got all your receivables and payables set up. But it also helps with your cash flow to make sure that you know what receivables and payables timing that you've got. So those go hand in hand. Now the cash method is basically just recording when you receive your cash or when you have to pay an expense. And that is sometimes the easiest way to manage your books and records, especially when you generally don't have receivables and you pay your bills right on time or very minimal payables. And it's acceptable to use the cash method, but from a planning and projection point of view, it's not as accurate. And generally for tax purposes, you should be using the accrual method as well. It's one of those things where once you selected a method, you should stick with it. So for larger businesses, and if you're incorporated, actually, you can't change it unless you get request or approval from CRA. So it's actually kind of a big deal if you're switching back and forth. You want to just stick with one method and go with that. So what we want to talk about now is measuring your business performance. And business performance is, again, something that maybe you don't really even think of. You've got your accounting records and maybe use them for tax purposes, but they are going to be able to offer you so much more information than just basic numbers. So at the end of the day, you want to make sure you're running the business end of your business. And a sustainable business is kind of basically come from how you're able to use your results to improve your business and be more efficient going forward. And there's many ways to measure it. Basically, you can use your financial statements as a starting point, and you can identify problems that would be possibly sabotaging your results. So one thing could be your cash flow. Are you in the negative, or are you close to being in the negative? That's a really big red flag that you need to monitor your cash. Inventory turnover is something that you might want to look at. So if you are selling your products, and how fast is your inventory being depleted, or if you have aging accounts receivable or accounts payable, then you want to look at trying to improve those situations. There's many other ways to use your financial results, and you need to maybe be a little bit more creative in terms of the type of business that you're running as well. But your financial records are going to be your starting point.
There's sorry, Peggy, there's a couple questions have come in. They're on basically around where and how to record revenue.
Okay.
Will we be addressing revenue specifically in a bit, or do you want to chat?
No, I think that's good to address it now.
Okay. So I'm going to start with the simpler one first, which is, if I have two types of self-employed income, do they have to be on the same line, or how do I keep them separate?
That's a good question. So if you're kind of running two separate businesses at the same time and you're not incorporated, so for tax purposes, you report it on your personal tax return, and it's on we're going to talk about this a little further in, but it's a business statement on your personal tax return. So you would need to basically set up a business statement for each business that you run. So if you are let's say you're running a personal training business, and you're also running, let's say something completely different, which, let's say you're also into gardening and you run a little gardening business, you would have like a separate business statement for each of those businesses, and you would report the results. It gets consolidated on your final, like, sort of tax reporting, but you need to actually show them as separate businesses. And HST comes into play too, because, and we'll talk a little bit about HST as well, but it's your combined income, your gross revenues from both businesses that have to be considered whether you should be charging HST or not. So if you have both businesses, let's say, earning $18,000 gross revenue, you may think that I don't have to charge HST, but you have to add them together. And if you're over 30,000, you have to start charging HST on your sales. So you really have to monitor that as well. So that's kind of a little added tip for that question.
Okay. On a similar vein, actually from the same person, and I think you're correct, this is most likely a sole proprietor, self-employed. So they're saying, they have their core business activity, but what if they make a little extra money at something different? What line would they record those earnings on? I think you answered it. They'd have two of those, two separate forms, one for each business. So that's the T2125 form, right?
That's correct.
Okay.
Now, I just maybe want to clarify one point as well. There is a distinction between what's a hobby and what's a business. So, and there is CRA guidance on that as well. But basically, if what you're doing on the side is just, a small little thing where you're not really pursuing new business, but just something comes up and, I'm just going to charge you a little bit for that, and maybe there's not a lot of supplies to be purchased. Is that really a hobby, or is that a true business that you're pursuing to earn income, and you want to not necessarily grow it, but if it's something that you're specifically pursuing as a business, then definitely it has to be reported. But if it's just, if you're into canning or something and you just sold some tomato sauce or something like that, it's not really a business per se. You're just selling it to friends and family. That's maybe more like a hobby. So everybody's situation and facts are going to be different. You would kind of need to step back and look at that, but it just kind of depends on the situation.
Okay. A little bit of clarification came on is they have their core business activity. and then they may have the opportunity to work as a subcontractor for someone else in that as well. So.
Oh, okay. So I guess, yeah, that would essentially be two separate businesses if the subcontractor work was completely different line of work from what they're already doing.
Right.
Yeah.
Okay. So maybe we can come back to some of this too towards the end too. I see a tiny bit more context as well, but let's we'll keep going, and I'll digest what the rest of the question is, and then we can come back to it too. But there is a thank you note here, so I think you've answered it for the most part. But there was one little thing I'm curious about, which I'm just going to read again, and then maybe we can chat again in a few minutes. So
okay, sounds good.
So we'll move on. I think we're moving on from this slide too. So.
Yeah, so we'll talk about financial results. So I already sort of mentioned some of these comments, but you want to get comfortable with your accounting reports as your measurement tools. And again, a lot of people think about tax time as the time that they have to have their records ready, but really these records provide so much valuable information that you want to look at them on a more regular basis. So whether that be weekly or monthly or quarterly, depending on your business, sometimes weekly is important, especially if you have a lot of inventory movement. So your basic accounting reports are going to be your balance sheet, which is basically your assets and your liabilities that are at a point in time. So often you'll see a balance sheet that says as at December 31st, say 2019. The income statement is basically what is used as tracking of your revenues and expenses over a period of time. So the income statement usually says for the period ending December 31st, 2019, or whatever period is that you're reporting on. And then your cash flow report kind of puts those two pieces of information together and is basically cash brought in and cash used up over a certain period of time. And the combination of these three reports or statements basically will give you a basis for doing a little bit more digging into your business. So get familiar with them. You want to make sure that I see a lot of small business people tracking their income statement for purposes of tax return. So they've got, you know, a form of an income statement set up, but they haven't really looked at what a balance sheet would look like and what assets do you have, and where is your cash at, and does it even balance? So you want to make sure that you're recording, you have a sense of your reliabilities and looking at your assets and your liabilities and seeing how that balances out. So think about your balance sheet a little bit too, not just your income statement. And the cash flow report, again, it's something that a lot of people don't think about looking at, and I can't emphasize more the cash flow report, because don't forget that your income statement is just a net profit, but it doesn't really reflect your cash. So cash flow reports can be very important. So interpreting your results. The important thing right now, like I said, is cash flow, and profits will get you to a certain point, but then looking at what are your non-cash expenses versus your cash expenses. And non-cash expenses would be like inventory, or I should say assets that are just amortized. So they may hit your income statement as a line item, but that's not really going to be a cash impact. And then you also want to look at the sources of your cash. Are you getting loans, or are your payables going up? Are your receivables going up, but you're not getting cash in? So if your cash goes down from one period to the next, then the cash flow report sometimes helps to identify some of those issues. Other ways that you can look at your financial records would be trend analysis. So if you have your balance sheet from, or your income statement, let's say from this month versus last month, well, you'll see some changes for sure, even year over year. So choose time periods that you can compare line items on your income statement. So if you've got your top line revenue is the first one that you can look at. So how is your revenue compared to the same time last year? Or last month, or even quarter to quarter. Also, you can look at your expenses, your cost of goods sold, compare time frames, and help to identify some trends. So if your revenue is going down, but your cost of sales are going up, then that's a trend maybe you want to look at as well. You want to make sure you're using some correct assumptions. So if you are importing any assumptions into how you're analyzing your records, make sure they make sense for you. And I mean, when you look at this year versus last year, obviously there's going to be some assumptions that you can make about, you know, how your future sales are going to be based on the way they are right now. So, you know, try and use, you know, current economic times as a kind of caveat to what you're seeing on your financial records. There's other things that you can look at as well. So revenues per unit, expenses per unit, and what is a unit? So it depends on your business. So a unit could be in like the obvious, like inventory, but let's say you have a services type business like I do. I sell like a service. I don't have a product per se. So for me, it might be how many hours am I spending for whatever I build a certain client, or maybe for you, you need to purchase assets for your business, some sort of equipment. So how much revenue are you earning per for the amount of the equipment that you've had to purchase to do it? So it helps to, you know, find trends again, and helps you to be more efficient with your resources. So that's sort of the accounting side of things, and I'm going to transition into tax issues because tax and accounting go together. So what we're doing from a tax perspective impacts, because we know that we have to pay tax. So you want to make sure that you are not paying more tax than you need to. You want to make sure you have accurate records when you come to reporting taxes. So the net income of your business is basically reported on your personal tax return. I'm sure most of you already are doing that. Generally, the filing deadlines for self-employed person is June 15th of the following year. So you get a little extra time to basically get your returns filed, but you have to make sure that you have paid by April 30th. Now, I know a lot of people don't even bring in their tax returns to get done until after May 1st if they don't have a June 15th filing deadline. And if that's the case, if they have any balance due, then interest starts accruing as of April 30th. So if you want to minimize your interest, you can always sort of make an installment payment if you have an idea of how much you have to pay, or just get your tax return by April 30th, all done, and then you're good to go. So as we already talked about, your business income is reported on a Form T2125 statement. And a very good point was brought up. If you have multiple businesses, you basically set up a return for each one of those businesses. Most software packages that you can get, like TurboTax Home and Business, I've used that one before for my husband's business when he was self-employed, and it's actually pretty user-friendly if you want to try it yourself. I don't recommend trying to do tax returns by hand anymore because they've just gotten so complicated. And I see people trying to do that, and often there are, you know, calculation errors. So I really do recommend using software of some type, and there's lots of them out there. I do believe you get what you pay for. So if you come across a free software, you're probably going to curse it. TurboTax Home and Business is one of my favorites. Outside of going to an accountant, if you feel like you just want to do it yourself, and it's more or less user friendly, so you can manage if you're comfortable with doing that. I'll just make a quick comment about paying installments. You want to make sure that because you're self-employed, you don't have anybody basically withholding tax aside for you, like you would when you have a job. So you don't want a nasty surprise at the end of the year and find out that you owe a big tax bill and you haven't held aside any taxes. So that's again another reason to have a separate bank account, is every time you paid, put money aside for your taxes into your bank account so that you know you've got it set aside already for when you actually have to pay. Once you get to a certain point where you're making enough income and you've got taxes owing, CRA is going to want installments from you. We'll talk about that a little bit later, but having a cash set aside makes a big difference, that you're not scrambling at the end of the year.
Yeah, I've seen, in my line of work, I've had people tell me that they made that mistake, especially in their first year as a sole proprietor when they were used to being an employee.
Yes. And a big surprise for self-employed person that they may not have actually really thought about is CPP contributions. So normally CPP is with, taken off your paycheck and you don't even notice it. But when you're self-employed, you have to pay CPP yourself, and it's doubled up because there is basically a personal portion and an employer portion. And because you're self-employed, you have to pay both. So you may find that you have enough expenses that you don't actually pay income tax, but you have to pay a couple $1,000s worth of CPP that you weren't expecting. So that can be a little bit of a surprise as well, especially for people that are just getting into the self-employed world.
For sure.
So we'll talk a little bit about expenses and what's deductible. And I've listed off a number of expenses here. And these categories are generally what you would find on a business statement form 2125 in your tax return. And the reason I wanted to point these out is because when you are setting up your expenses for your business, you can save yourself a lot of time by recording your expenses according to these categories, because then when you do your tax return, you're not spending time trying to fit what you've set up for your books and records onto what's actually allowed on your tax return, because the form 2125 has actually got fixed categories and lines on it. So it just is a lot more efficient to start off or get used to recording your expenses in a certain way that you can easily transition that onto a tax return. Whether you do the tax return yourself, it'll save you time, or if you are going to have an accountant or somebody prepare your return, it'll save you professional fees for sure. So I'll just go through some of these expenses, just an overview of what's deductible and what's not, because I see all kinds of things all the time that people will try and deduct, and I'm kind of a by the books kind of person when it comes to being an accountant and a tax person. I know what CRA is going to allow and what they won't allow. So there's no point trying to push something through and then have it denied at some point, and then you have to pay more tax because now your taxable income's gone up. So CRA is doing more and more reviews on small businesses. I think it's low-hanging fruit for CRA to get more taxes from small business people. And so if you take the position that you are going to file your return based on legitimate expenses, you're much further ahead in the end. So we'll just start digging into some of what these are. So we'll talk about advertising and donations first. So we can go to the next slide there, Rob.
Oh, I'm sorry. Okay. Yeah.
No worries. Thank you.
Yes.
So donations, often I see people trying to claim donations that aren't really donations. So GoFundMe is a popular one. You actually have to donate to a registered charity in order to claim it as a legitimate donation. And technically that donation goes on a separate schedule, not on your business schedule. It's still in your personal name, and it goes on to the donations, which is subject to a different tax calculation to get the amount that you can claim. If you are incorporated, then I would suggest it's kind of a waste actually having a corporation claim a donation, because it's just kind of an in and out expense. It doesn't really adjust your taxes much. If you're going to make a donation, I often recommend that you make it in your personal name and it can go on your personal tax return. Now, if you happen to donate to something that isn't a registered charity and you don't get an official receipt, then depending on what it is, a lot of times we'll claim it as an advertising and promotion expense, so that you can still get a deduction for something that you've supported in the course of your business. Meals and entertainment is a big category where a lot of people go wrong. They don't keep the receipts properly, for one thing, and only 50% of it's deductible, and it has to have a business purpose. So if you are going through Timmy's drive-through and grabbing a coffee, or that's not deductible as a business expense. I see that happen all the time, and really, you need to have a proper business meeting. You have to have a proper business contact. Technically, you should be writing your client's name on the back of the receipt, and that's what CRA is looking for. I've seen them deny hundreds of dollars worth of meals and entertainment type costs, and I've also seen them accept it. So it can be all about who you get at CRA who's reviewing these things, but I don't like pushing that envelope too much. I think it should be a business purpose, so be mindful of that. Club dues and gym memberships. A lot of people ask about that. Are those deductible? I'm sorry, they're not. Those are a personal expense. If you are, let's say, going to a golf club for dinner with a client, then 50% of that meal can be deductible. But golf dues, club memberships generally aren't deductible. And I just put in a comment here, categorizing your expenses in the same way year after year will ensure consistency in your reporting, so that you're not going to have big jumps in your expenses on a year-over-year basis, because that creates red flags for CRA. So if you have a massive increase in your office expenses one year, but it was only because you decided to claim something in your office expenses that you hadn't last year, then you want to try and avoid some of those things. So looking, again, trend analysis always helps too.
Right. There's a couple of questions, one specifically around donations, Peggy, if you don't
Okay.
So one here, I happen to know it's someone who runs a thrift store, and they're not a charity, but they accept donations of goods that they can resell as part of a social enterprise.
Okay.
So this thrift store is a social enterprise. They get donations of goods, they sell that, and they use that, and sometimes cash donations as well. How do they record those donations? So they count as income? Like, so I guess both for product and for cash donations, how does a social enterprise record this?
Well, my thoughts are that's a not-for-profit. Would that be correct?
So I don't believe they're registered as a not-for-profit though. So they're registered as a for-profit, sole proprietorship, but they have a social enterprise aspect to the business, or it's a socially motivated for-profit, I think is the way.
Okay, so they're still making a profit, so they're still considered to be running a business for the purpose of producing income. So you would still be recording that as revenue. Yeah.
Still reported as revenue.
Yes.
How about products? So if this person receives a product, a bunch of products donated to them, secondhand goods even, does that get recorded as income in any way, or?
Well, it would be if those are then going to be sold. If I'm understanding the business model properly, like if they're receiving donations of products that are then going to be sold for a profit, then that would be a donation of products, and you would have to estimate what the value is of those products, and that's what you would record as, say, your inventory.
Gotcha.
Okay, so it's based on what it's worth. If cash is cash, but if they received like a skid of donated Coca-Cola, for example, then you would have to look at what that's worth.
Right, right, okay, and record that as income.
Yeah. Well,
certainly the cash that they receive would have to be recorded as income. It's just, I guess,
yeah.
Okay.
I'm gonna have to think about that, because that's something I haven't really looked at before. I'm not sure if that's recorded as income, because
Okay.
technically they're bringing that into their inventory to then on sell to somebody else.
Right. That's right.
Right?
Yeah.
So no, I don't. I think you would record that as an expense based on the value.
Okay. Tricky one we throw in
Yeah,
your
it's a
way.
tricky question. I'm gonna have to think about that one.
Okay. I'll record the question and we can always connect you offline too.
Yeah, I might have to look into that one a bit more. That's a different one.
Okay. There's also I think we're well, one of the there's a okay. Couple things. One person had also asked around expenses. So the classic entrepreneur typically tries to throw everything they can down as an expense and to bring their income as close to zero. This entrepreneur is thinking, do I have to take all my deductions? What if I want to, for my own personal reasons, show my income as being higher? I'm guessing maybe they're thinking about refinancing in the future, or a loan or a mortgage in the future.
Yeah.
Do they have to take all their deductions?
No.
Okay.
I mean, technically there's a balancing there, because the less deductions you take, the more tax you're going to pay. Right? So there's a balancing there, but I wouldn't over report anyways. But if you're trying to, like my brother-in-law was self-employed at one time, and he did that and then tried to get financing and couldn't get it. So that's a very good point. So you have to be mindful of some things are discretionary, like taking depreciation on your assets is discretionary, and just be really really mindful of the balance of paying tax versus not recording assets, because you can't take an expense this year and decide to record it next year.
Right.
So you have to record it in the year it was incurred. So
Okay.
there's a matching system there. So if that's what you're thinking, then that's not really going to be a course of action either.
Okay.
So yeah.
Fair enough. There's also a question around around some of the meals and entertainment, and basically the question is, let's say I buy coffee for my staff, can I write that off?
Yes. Yeah. You could write that off as a business expense, and I would still record it as a 50% deductible amount. But yes, you could.
Okay. So there's no outs here. There's no saying it's for promotional purposes or okay. Well, I guess you can say it's promotional, but it's still at the 50%, right?
Yeah.
Yeah.
Anything food related in particular, you can give your employees gifts, and there's specific rules about that. Let's say a Christmas party where everybody's invited, and you can have a certain number of events each year that come up to a certain dollar amount. I'd have to look at the amount for sure, but that's different than buying your staff like coffee or dinners, that sort of thing.
Okay.
Yeah.
Perfect. I'll move it along for you
Okie
here.
doke. Yeah, I think we're going to kind of move it along a little bit so that we have a little bit more time to spend on some of the other things.
Yeah, actually, it's already 1:45. I apologize.
Yeah, time flies when you're having fun. So, so motor vehicles. I'll just make a point here on the fact that so I've got some points for you on the slides that you can look at, but the main thing I see is that people aren't keeping proper travel logs, and that's really important for when you claim motor vehicle expenses, that you are tracking your distance traveled for the entire year. So take a odometer reading at the beginning of the year and the end of the year, and then specifically tracking your business kilometers. So who you are seeing and where you had to go, and make sure that you keep a full year for at least 1 year, because that's required by CRA. Once you've got a full year down, then if they ask for something, then you can provide a 3-month, but like synopsis of the year. But you need to get a full year recorded in order to support your vehicle if you are using it in your business. And on the next slide, I'll just make a point about buying luxury vehicles. I don't know if anybody likes luxury vehicles and likes to use them for their business, but when you claim depreciation on your vehicle, it's actually limited to $30,000 plus your taxes. So if you've bought something that costs more than that, then your depreciation ability is going to be limited to a certain $30,000. So you can't over expense a luxury vehicle. And that goes for leasing costs too. Anything over $800 a month plus taxes is also capped off at that point. So just a couple of notes on vehicles. And something that's been introduced in the last budget are zero-emission vehicles. So basically fully plug-in or fully electric vehicles get a preferred amortization deduction rate. They're not cut off at the 30,000, it's actually 55,000. So if you have a zero emission vehicle that qualifies, then there's a bit of a benefit there. So we'll talk a little bit about home in the office, or office in the home, I should say. Office in a home, again, people will try and overclaim that. It's pretty limited on what you can claim. If you have a business elsewhere where you actually meet your clients or like another location, then you can't claim an office in the home. You have to be very careful about this because CRA will deny these expenses, and it's really only based on the area that you use for business purposes. So you have to make an estimate of your square footage, and certain expenses will be deductible, like your utilities, your insurance, rent or property taxes. But I don't recommend claiming depreciation on your home because you could get into some nasty tax consequences when you try and sell, and you may disqualify for the principal residence exemption on a portion of your house, which would not be good.
Right.
Okay, so one comment I'm going to make about capital versus current expenses. So again, this is talking about what you bought for your business that is going to have lasting value. You can't fully deduct it in the year you purchase it. If it's going to be like a computer or some form of equipment, you need to make sure that you set it up properly and amortize it over time. And it's one of those things where people, like self-employed people, don't always think about their assets and what they purchase that use in the business. So be mindful of what you're trying to deduct in any given year. Does it have future value? If it does, really you should be capitalizing it, as we call it, and then amortize it, which means you take a deduction over time. And that will depend on what type of equipment it is. Computer equipment, for example, you can depreciate over 2 years versus furniture and fixtures is over 5 years. So it just depends on what it is. So those are kind of the nuts and bolts of filing of your tax returns. I'll talk a little bit about installments, which I had already kind of mentioned previously. Back to that comment, don't wait for the surprise amount. If you have the money set aside as you make your sales, you'll be in a much better position. If you do have net tax payable of more than $3,000, you'll need to pay installments. And usually CRA will give you kind of an extra year because they calculate your installments on a 2-year averaging basis. So in the first year that you're self-employed, if you have more than $3,000 you owe, you kind of get an extra year before CRA will ask for installments. But once you get on that installment schedule, sometimes it's a good thing because then it's forcing you to pay and stay on top of things. They're generally paid quarterly. And if you are under installed by the end of the year, then there will be penalties and interest, which are not deductible. So it is a waste to have to pay that for sure. You want to make sure that if you have a year where you're going to have a really good year, you feel like you're going to be much higher, you may want to make higher installments than what they're asking for. Conversely, if you're going to have a year that's lower in net income than previous years, then you could pay less. But If you pay less, but you still owe more than $3,000 at the end of the year, you're going to be hit with penalties and interest. So just be careful of that. And make sure you file on time. It's really important because that's another red flag to get audited. As soon as you fall behind, they'll be on you. So I recommend that you keep up to date on your filings. Dealing with CRA can be stressful, so you want to avoid that as much as possible. If you do get a brown envelope in the mail, don't avoid it, open it. It's a notice of some sort and you want to address it right away. It could be a notice of assessment, so you want to make sure if it is, that it was done according to what you filed. If it's not, then you need to address that because you only have a certain amount of time to deal with assessments that aren't correct. If it's a review, a request for information, then a lot of times you only have 30 days to respond. So if you don't, then they're just gonna throw out whatever it is that they were asking for more information for, and then you've got a bigger mess. And I just also included red flags again, and I already mentioned this. Be aware of significant year-over-year changes on your expenses and returns that are filed late. From what I understand right now during this time, CRA has suspended their audits and reviews. I don't know how long that'll last for, probably until June, but you shouldn't be getting anything in the mail that's asking for reviews in the short term at least.
So it's a great time to be getting caught up on things.
Exactly, take advantage. I totally agree. So we'll just talk a few minutes about HST. So if you are making gross revenues over $30,000, you are no longer what's called a small supplier, and that's in any 4 consecutive quarters. So it's not necessarily from Jan 1 to December 31st. You've got to track it. And if you go over that threshold, you need to start to register and remit HST on your sales. So be mindful of that if you are in a growing business. HST returns must be filed by June 15th, but the payment is also due April 30th, similar timing to your personal tax return if you are just a sole proprietor or self-employed person. If you're not, if you're going to register for HST, you also want to make sure that you are remitting to the government, again, holding that money aside, that you are not using that money because it's not your money. So keep it aside and remit it when it's required. When you get to a certain amount of owing, then again, you'll have installments. Again, if it's more than $3,000 owing in any year, then installments need to start. So again, CRA will be looking for that. Okay, so we have a few minutes left. So we're going to skip this slide, Rob, and then we'll go on to CRA assistance during our COVID-19 drama.
Perfect.
Okay, so deadlines have been extended for individuals. So personal tax returns for normally due April 30th will be due June 1st, so a little bit of an extension. Any payments are due September 1st, but self-employed people don't get an extension for their filings. So make sure you are filed by June 15th, but you don't have to pay until September 1st. HST payments are normally due March, April, and May, are also deferred until June if you file annually, which would be for most people, I'm assuming, on this attending today. Quarterly filers will also, or payers will also get a extension. And corporations, if you are incorporated, tax returns normally due between March 18th and June 1st are also deferred, as well as payments. So that is some assistance. My next slide talks a little bit more about programs that are available. There have been daily updates on these programs, so it's really hard to stay on top of it. But if you are basically qualifying for any of these programs, I highly recommend you take advantage of them because it's there for you, and what's happening is unpredictable. So you may not think that, oh, I don't need it right now, but you should really consider what's available to you. The most common one is what they call CERB, which is the basically the program that replaces your EI. So if you have employees that have been laid off, they would be eligible for this program. It's $500 a week. They just apply online. And basically they're making updates on this program all the time. You have to reapply for it every 4 weeks. And they're basically, the program was set up previously where you could not be making any income at all. But now I believe even today they've made some updates where you can be earning up to $1,000 a month and still be eligible for the program.
Right.
Or if you are an essential worker and you are making less than $2,500 a month, you will qualify for the program. So that's a big benefit.
Oh, I didn't catch that one. Okay.
Yeah, I just saw that in the news.
It's hard. It's hard to keep up right now.
Very
It's changing every day. Yeah.
Are we able to go over time just 5 minutes or so, Rob?
By all means, yeah.
Okay,
And you know, people, yeah, by all means. So
great. Because I just wanted to mention a couple other of these programs that I'm not sure how many of our attendees today will be eligible, but it's worth mentioning. If you have employees, there is a 10% wage subsidy. That's where you, up to 10% of the employee's wages to a maximum of $1,375 for the month is available. And this is a program that you don't actually have to apply for. You basically just reduce your source deductions by that amount. So you basically are reducing the amount of CPP, EI, and income taxes that you have to remit for the month on your payroll. So that results in a cash savings for you. So that's something to consider. The bigger program is the 75% wage subsidy program. And this is for, from what I understand, for corporations, but I could be wrong on that. But it's a program that you actually have to apply for. And there are very specific rules about who is eligible. You have to show that you've got a certain amount of reduction in your revenues over the course of March, April, and May. And you have to have paid wages to your employees, so not just to yourself. So that is going to be a bit of a limitation on who in this group that we have today would be eligible for this program.
I believe the number was $50,000 in T4s for 2019.
Right.
So I've had a couple questions come through. Oh, what if I have subcontractors? I believe they wouldn't be eligible if they don't have payroll of 50,000.
That's right. Yeah.
Right.
Yeah. I'm afraid that it's based on payroll.
Okay.
So that is some ways where they're making these programs very limited on who can apply. Because the one program that I think would help so many people, especially if you have rent to pay, is what they call the Canada Emergency Business Account, which is the $40,000 basically loan that you can get. And if you get it through the bank. And this program basically $10,000 of it is forgivable if you repay it by 2022. But again, the issue is here you have to have paid a salary of between $50,000 and $1 million, which is a huge threshold for a lot of small business owners to have paid more than $50,000 in a salary. And I just think that there's been a few articles in the news lately about how this program could help so many people, but so many small business owners that, like even for myself, that I've just started out this year, I don't have last year's wages to look at as to meet that threshold. So there's been a lot of updates about this program, and I think you should stay tuned to it. If you think you might be interested, but you don't qualify right now, they may be updating this so that you will be eligible for it. They're also talking about reducing the payroll threshold to either $10,000 or zero. Wow. And they're also talking about possibly adding a $10,000 grant, which would just be like money paid to you, no strings attached, if you don't qualify for this $40,000 loan. So if you have rent to pay or other expenses, then even that would be helpful. So I think, stay tuned on this program. So
it also doesn't hurt to reach out, send a quick, brief, polite, professional brief email to your local member of parliament or
Yes.
member of provincial parliament, just saying, hey, here's my concern, here's my challenge. So
a lot of people are doing that. My dog groomer, Blue Dog, she did that. A beautiful letter she wrote. I high-fived her on that one. Yeah. So a lot of people are speaking up on this, and I think the government's ears are open. They just need to, figure out how they can deal with it.
Yeah, that's been my experience too.
Yeah. Okay, so we'll move on to business survival in these challenging times. So as I've mentioned throughout this whole presentation is you got to know your numbers, you got to know your cash flow and what your expenses are, and look at what your needs and your wants are. Maybe right now you just go with what you really need, and the wants, the fancy paper that you like to buy, maybe you can go paperless and not even worry about some of those other expenses. So look at strategize at how you can cut your expenses and just go with what you really need for now to keep your business moving along. If you do have receivables, try and collect on the amounts that are owed to you. So I know that the other person on the other end is going to be, hard to pay as well. So maybe try and come up with an arrangement of, a payment plan or some way that at least has some income coming into you as well. And again, with your expenses, look at what the payment terms are on your expenses and whether you can push that to a certain due date or, negotiating with your creditors as well. As we already mentioned, use the credit if it's there, if you're eligible for it, and follow the government announcements because things are changing daily.
Right.
So be a leader, get into the math. Math is not everybody's favorite thing, but you can take this time and be focused and set it up, and then you'll be ready to go when things get busy again, hopefully soon. So that concludes. I just have one more. Time on your hands, basically just what I said, start strategizing marketing for when things pick up. Everybody's online just like we are today. So get your social media going if you've been a little bit lax on that. Be online and be visible, and just be helpful, like not being trying to sell, and just see what people want and what they want help with, and maybe you can help, or just be creative about different ways that you can reach out to your customers. And people will remember that.
Absolutely.
Yeah.
Yeah, some kindness goes a long way, right?
For sure.
Yeah. I've been reflecting on the couple of downturns I've lived through in my time, and during them, there's a lot of people that hurt, but there's always businesses that come out stronger in the end. And it's just, if they take your advice that you've offered today, I think you can come out stronger in the end of this. It won't be nice, it won't be easy in some cases, but I think you're quite right. Use some of the time, right? We all need time to shut down and have self-care.
Go for a walk.
Yeah, definitely. Yeah. Plant a garden, whatever you need.
Yes.
Yes. I think there might be a couple more questions. Are you okay for another minute or two?
Yes, I'm definitely fine. Yep.
Oh, beautiful. Thank you. I missed one about HST. Let me read it. If you have HST, but you're not charging HST for your services, is it okay to only report the HST paid and receive and leave those you don't charge the HST out? I think there's a couple things here because it looks.
So if you are registered for HST, you have to collect it on your sales and you have to remit it. You don't have a choice. So if you, let's say 1 year, you had a really good year and you breached that $30,000 small supplier threshold. So now you have to register and you're collecting HST. But let's say a couple years later, you actually didn't have such a good year and you're down below the 30,000. And even though you're below that 30,000, you're still registered. You still have to collect and remit on your sales. So if it looks like you're not going to get over that 30,000 in the future, you can suspend your account or close it. But once you're registered, you are in, and you can't pick and choose.
You charge everybody, right?
You have to charge everybody. In fact, your your HST number should be on your invoices.
Okay. Yeah. Okay. Great point. If for some reason this person is below 30,000 and they're not charging HST, so they wouldn't charge HST to anybody, how do they record the HST they've paid? They must get it. Does that count as an income tax expense, Peggy?
Okay, so if you are, let's say you've never registered for HST and you're not registered and you've got sales that you're not collecting HST on, then when you report your expenses for tax purposes, you include HST that you paid as the total.
Okay. As a total expense.
Yeah.
Okay. Yeah.
So conversely, when you register for HST, then you are going to report your income statement on your business statement, on your tax return, what we call net of HST, which means both your sales and expenses don't include any HST on them. And then separately, you file your HST return, which will then show the amount that you collected. And then you can claim what we call input tax credits, or ITCs. And the ITCs are the amounts of HST that you paid on your supplies and your expenses. So then you pay a net amount based on that. So you can reduce the amount that you collected by the amount of HST that you paid on your expenses.
Got it.
Now there's another, I'll just quickly mention, there's also the quick method for HST. So if you are in a type of business where you don't have a lot of expenses and it's kind of a pain tracking your ITCs, then you can elect, you actually have to apply and have it approved by CRA, but you can get approval to file under the quick method, which means that you don't need to track your HST paid. You just do a formula calculation to calculate how much you have to pay. And it's a little bit easier to do from a record keeping perspective as well.
Gotcha. Okay. Oh, let me read another one to you here, if you don't mind. Peggy, I have a question. I applied first for EI, but it was not clear for my situation. Oops, sorry, just got bumped a little bit.
Oh, for the CERB program?
Yeah, so yeah. I have not received any money, and then somebody said I can apply for CERB. I did, and then I received money from EI, and then I received the CERB. Okay, so the person has now received both EI and the CERB. Now
it shows up. Yeah, it shows up as EI, like on your bank. It shows up as a line showing that you got EI, but really it's the CERB program, because I think pretty much anybody that applied for EI before they came out with this CERB program got automatically transitioned to the CERB program.
Okay.
So even though it looks like you got EI, it's really the CERB program. So I don't think there should really be any concerns, and you just have to remember to apply again. Like they should have, if you went on and set up an account online to basically apply, then you should have got a notification as to the date that you have to reapply, which should be sometime soon.
Yeah, yeah, that's a great point, that people have to reapply for the CERB benefit.
Every 4 weeks approximately. So they should have provided you with a date as to when you have to reapply by.
Okay. Couple shout outs for you too, Peggy. Suzette says this was excellent.
Thank you.
You covered all the relevant, important items, so thank you. And Elsa also said she wanted to thank you very much for taking the time to explain this important information. So
thank you.
There is time if anybody else has any questions out there. We're great, and Naomi, thank you as well for sending those kind words. I agree. Peggy did a great job with this presentation. My job is so easy on days like today. Peggy puts all the slides together and I just hit next, and occasionally she has to nudge me in between sips of tea. So Peggy, thanks for this.
Well, thanks I enjoy doing this and always happy to help.
Yeah, so Peggy, is it okay if I email these slides to everybody that was on the call?
Yeah, feel free to go ahead with that. Yeah.
Okay. And everybody, you'll have both my email and Peggy's email when I send it. Please don't be shy to reach out to either of us. I work for the City of St. Catharines in economic development, small business support. So don't be shy. This is Peggy volunteering her time as a professional. So please be mindful of that. I know she's happy to have a chat and answer questions. at some point, though, it probably does cross into hiring Peggy for her time. But I'm sure Peggy is happy to indulge any questions.
Sure, and that's always based on discussion. So
absolutely, yeah, absolutely. Okay, Veronica, I see your note. I will definitely send you the slides. Everybody on this call, I believe I would have their email for. And there's a question, is CERB like EI? So the emergency response benefit basically, if you've applied for employment insurance, you'll automatically be considered for the CERB.
Yeah.
But in some cases, you might not be eligible for employment insurance, but could get the CERB. Does that match with your?
Yes, from what I understand, from what Trudeau has said, basically, if you've applied for it, you will get it.
Right.
And I even have a family member who hasn't filed tax returns for the last 3 years, and I think she's still eligible for it. So, okay. So yeah, you can. I don't think they're putting any barriers in place in terms of applying and getting it. What will come out of it is, were you technically qualified? Because you cannot be working. Okay, so if it turns around that I don't know what they're going to do, say at the end of the year, whether they're going to be asking you to certify, or if you get a T4 and they may be asking, looking into whether you really were working during this time, technically you can't be working.
Yeah, so there's a question, so I don't pay it back, and that's correct. You don't pay this back. It's
I believe it's taxable income, though.
That I agree. It is taxable income, so
be ready for that.
Yeah, so do put aside, at least 20% of what you receive for income tax time, right? The only way I could see somebody having to pay it back is if you truly weren't eligible, because they're giving it to everybody, and if for some reason you truly weren't eligible, it's possible at some point in the future, in my opinion, that you might have to pay it back. Like if I applied as somebody who's fully employed, they'd give it to me, but then probably at some point I'd have to pay it back. Yeah, Peggy's nodding too. So
and see, I'm not eligible. I'm still doing tax returns. It's tax season, so yeah, I'm not eligible for any of it. So you really have to be aware of what the eligibility requirements are. I know that EI, there's some pretty strict and severe consequences if you get overpaid.
Right.
And I don't know if they're going to apply the same types of consequences to this or not.
Yeah, it's historic, the amount of money that's going out.
Yeah,
and right. There is a question from a cleaning company.
Okay.
They have they have some accounts receivable that are overdue, that are that from February, March, and the monies are still coming in now in April. But they've truly had no revenue that they've generated in April, so for more than 14 days. When do they count that money that they did the service in February, they did it in March, and now the income is coming in April? Do they technically become disqualified for the CERB, or is it that they earned the income back in February and March and therefore have no income for April? Do you understand what I'm saying?
Yeah, I do. That's a good question. My understanding is that you have to be shut down for business as of March 18th, it was, I think.
Okay.
So to qualify. So even if you had, receivables from a prior, date prior to that, I don't think that would disqualify you because you're getting it now, but I think you can't be open for business. You have to be shut down.
Right.
I think that's what the test is.
Okay, fair enough. We won't hold you to it. It's a matter of
that's a tricky question, but that's my understanding.
Yeah. There's a ton of gray area here.
Yeah.
Okay. I don't know if there's any other questions. Sometimes it's not quite easy to see, though I think we've covered them all. Peggy, again, thank you so much for volunteering your time to
you're
spend
welcome.
with us. It's greatly appreciated. There were 22 people on the call at the high point, and there's still there's still 16 people
Oh,
here
wow.
with us. So yeah, so it's very kind of you to spend the time with us, and we will share out these slides. I think I recorded this too, and then we'll put it on a YouTube channel with the City of St. Catharines Economic Development as
Oh,
well.
great. I'm on YouTube.
Yeah, you'll be on YouTube. You'll be a sensation when the
Excellent.
royalty checks start coming in.
Excellent.
We'll cut you in, okay?
Awesome.
All right. I'm
Thanks,
gonna
everybody.
Yeah, thank you everybody, and thank you again, Peggy. So I'm gonna end the meeting here. We'll sign off, and hopefully everybody's grabbed our contact info, but you will get an email from my office later today with these slides and with this contact info as well. So okay, thanks so
Great.
much.
Thank you. Bye,
Okay.
everyone.